Hello and welcome back. In this video, I'm going to proceed further. That is, I'll proceed from the point wherein we left previously. Before going further, I'm going to ask a few questions. Let's discuss a few questions and some more concept related to what we did in the last video. See, let us assume a situation when there is a person, or let's assume a company. Okay, let's assume there's a company R Limited. It's holding shares and debentures of other entities. Okay, and it's holding shares and debentures of other entities for trading purposes. So if I talk about the classification of the transactions of purchase and sale of these securities in CFS, how will you classify that? If there is a question like this in front of you, then we know that basically operating activities are the principal revenue producing activities, and they are different from your investing and financing activities. So since the company which I told is holding shares and debentures for trading purposes, and that's a part of its business, so it should be classified as operating activities. Clear? Now there is another similar query. If there is a bank, let's say it's A Bank Limited, and it is preparing, let us say it's CFS. Okay. Assume it's in a financial entity. So how it's going to deal with interest payment and how it's going to deal with the receipts of interest? The answer is very clear that for a financial entity, that is maybe it's a bank or whatever, the interest payment or interest receipt or even dividend receipts, they are principal revenue producing activities. So they have to be disclosed under operating activities. And if it is a matter of dividend payment, then it is a cost of finance. And then it should be classified under financing activities, even if it is a financial entity. Okay. Now there is one question in front of me. You can just understand that question. Now, during the year, there is H Limited. It has acquired 60% shares in Y Limited. 60% equity shares it has acquired for 50 crores. Fine. And it has sold 53% shares in another company, which is Z Limited, for 40 crores. Fine. So it has acquired 60% shares in Y Limited for 50 crores and 53% shares in Z Limited for 40 crores. Now, the accountant wants to net off the transactions. He wants to disclose only 10 crores under investment activities. The query is, can he actually do that? So it's very clear that as per AS3, if it is acquisition and disposal of subsidiaries or other business units, you cannot net them off and you need to prepare a separate presentation. So you have to present them very clearly and separately as in under investment activities. You show that, let's say, acquisition of a subsidiary, if it is like 50 crores, and disposal of subsidiary, if it is a subsidiary, then disposal of subsidiary, maybe then in that case, if the money is coming in, you'll add it 40 crores. In case of acquisition, of course, it will be a negative. Fine. Now we have already understood certain issues wherein we saw that sometimes single transaction involves multiple activities. So similar case I'm going to discuss with you for that. Let us say there is a company which has acquired a car for 10 lakhs and it has acquired this car for 10 lakhs on credit for 3 months. Right? Now this delay in payment is, if there's a delay in payment, it is charged with 12% interest. And the company we see, it has paid a total amount of 10.5 lakhs. So the question in front of the company is how it's going to present that in its CFS. Now we know that as per AS3, if there is a single transaction, but if it involves multiple activities, then you need to bifurcate and classify them under respective heads. So we know that in this case, there are two activities. One is the payment for the asset, that is 10 lakh, and second is the payment of interest because of delay, that's 0.5 lakhs. So payment for asset definitely is an investment activity, and payment of interest, that's a financing activity. Okay, so you'll have to present that under respective activities of CFS. Now there is one more query in front of me that I'm going to discuss, then I'll go further. Let me quickly take that up now. Now, there is a company, Raj Limited. It has purchased fixed assets from Egypt. Okay. You can note it down if you want. It has purchased fixed assets from Egypt for $10,000. Now, this is basically related to foreign exchange. So, I'm going to take this question once I finish the foreign exchange topic. So, I'll skip this question. And before that, I'm going to ask one more question. You all can think about it. There is a company, G Limited, has acquired plant and machinery for 20 lakhs and it sold furniture and fixture for 5 lakhs. Now, can the company disclose net cash outflow towards purchase of fixed assets? Here also, we know that you cannot disclose net cash flow in respect of acquisition of plant and machinery and disclose of purchase of fixed assets because we know that major classes of gross cash receipts and gross cash payments arising from investment financing activities are to be reported separate, right? So if you purchase plant and machinery and you've sold some furniture, you can't net it off. And one last very simple query was that withdrawal of demand deposits has been classified by Punjab National Bank as an operating activity. So is it correct or not? It is absolutely fine. This withdrawal of demand was by a financial institution. So that's an operating act, right? Now, as far as the forex part, I'm going to cover that now. So let's go to that. This we've already seen, right? Netting off and all this. So I'm going to start with this foreign currency cash flows. I'm going to summarize it up very quickly for a revision video. Okay. So you can just read this once. So once I'm explaining it to you, it's clear to you. There was one small query which I can right now discuss before we start reading this was that how of treating bank overdraft as a cash and cash equivalent. So as is, there is no guidance on this in AS3 particularly. But if I talk about IFRS and Ind AS 7, then there are certain standards which say that yes, you can do that. And bank overdrafts which are repayable on demand, they are included as a component of cash and cash equivalents also. So as of now, you can treat. It is advisable to treat bank overdraft as a part of cash and cash equivalents only when it is repayable on demand, right? Now, I hope you've read this for currency. We know that whenever there is a cash flow in case of foreign currency, the receipts and payments of foreign currencies should be converted into the reporting currency, that is rupees in India. And you have to use exchange rate on the date of cash flow. You can use, the entities can use any rate which is approximately to the, which approximates to the actual rate, right? For example, if there is a company which is borrowed, let us say $1,000 from, there is a corporation Y from USA, and assuming that the date of loan agreement is, let's say, 1st January, and you have received the entity on 15th January same year because of RBI approvals, etc. On 1st January, maybe the exchange rate was 45 rupees, and on 15th January, the exchange rate was 48 rupees. Then what rate should it be converted for presentation in CFS if that's a question in front of you? So we know that if there is a foreign currency cash flow, it has to be converted into reporting currency. You to use exchange rate on the date of receipt or payment. And on the date of receipt or payment, in this case, the case which I told you is 15th January. So the relevant rate will be the second one, that is 48 rupees. So the borrowing would be $1,000 into 48, that is 48,000 rupees. That should be shown under your financing activity because it's a borrowing. Another important thing about this is that if there is any unrealized foreign exchange gain or loss, then what is it? Is it a cash item or not? Obviously, it's a non-cash item. So we do not include it. So any unrealized foreign exchange gain or loss has to be excluded from the cash flow statement. Cash flows from extraordinary items or exceptional items are disclosed separately under appropriate activities, which are based on the nature of cash flows. And that comes under certain, now we'll take a look at these, take a look at these non-cash items and other things. But before that, we do that, just go to these three paragraphs, 25, 26, and 27. I'll wait for you, and then I'll proceed further. These three paragraphs, you must have read that there are certain points which I would like to add. That if there is any change in the exchange rates, there has to be some effect on cash and cash equivalents. So that should be reported as a separate part of the reconciliation of changes in cash and cash equivalents during the period. One thing. And second is that you have to also see the applicability of AS11, because we know that cash flows which are denominated in foreign currency, you report them in manner which is consistent with AS11. And usually you can use weighted average exchange rate also. Okay. Then we have this point that unrealized gains, we already covered that. And effect of exchange rate changes on cash and cash equivalents is reported in the cash flow statement so that you can reconcile them at the beginning and at the end of the period. And this is separate from the cash flows from operating, investing, and financing activities. It will also include the differences, if any, had those cash flows been reported at the end of period exchange. So, okay, so this last line is very important. Keep that in mind. Now, if there is any extraordinary item, the cash flow associated with that should be classified as operating, investing, or financing, as the case may be. And if there is any cash flow associated with extraordinary item which is disclosed, and this, please keep this in mind that these disclosures, in addition to the separate disclosures of the nature and amount of extraordinary items required by AS5 or bright period items. Let's go to interest and dividends now. Cash flow from interest and dividends received as well as paid, you have to disclose them separately. Okay. Interest paid and interest and dividend received. If it is a financial enterprise, then in that case, interest paid and interest and dividend received is something which is cash flow from operating activity. And if it is any other enterprise, then cash flow from interest paid should be financing activities, while interest and dividend received should be investing activities. And dividend paid should be classified as cash flow from financing. So I'm repeating this once again, or you can rerun the video. Okay. Let's proceed further. Now, the total amount of interest which you have paid during the period, total amount of interest which you have paid in the period, that you disclose in the CFS, whether it has been recognized in expense in the statement or whether it has been capitalized, right? So whatever interest you have paid, you will show that in cash flow statement, irrespective of the fact whether you have expensed it or whether you have capitalized it under AS60, right? You can once again revise. Interest paid is in case of financial enterprises, operating activity. In other cases, interest paid is financing. Okay. Interest paid and interest and dividend received, as in the 32 paragraph, you can see the same thing. They are usually considered as operating cash flows for financial enterprise. However, as far as cash flows for other enterprises, there is no consensus. So what is the most appropriate thing is that it is more appropriate that interest paid, interest and dividend received are classified as finance and cash flows. Okay. Now, as far as dividends also, it has been clearly mentioned in para 33 that it is considered more appropriate that dividend paid should be classified as a cash flow from financing activities because they are the cost of obtaining financial resources. Taxes on income, if there is any cash flow from taxes on income, they should be separately disclosed and should be classified as cash flow from operating activities unless they are specifically identified. Taxes paid usually classified as operating. Okay. However, when it is practicable to identify the tax cash flow with an individual transaction that gives rise to cash flow that are classified as investing or financing, then you classify accordingly. And when tax cash flow is allocated over more than one class of activity, then you have to also disclose what is the total amount of taxes you have paid. Okay. Now, if I talk about investment in subsidiaries, associates, and joint ventures, when you're accounting for an investment in associate or subsidiary or joint venture, investor restricts its reporting in the cash flow statement to the cash flow between itself and the investee. So whenever there's an investment, you will normally tend to restrict yourself between itself and the investee. For example, whatever are the cash flows which relate to dividends and advances. Another important aspect here is acquisition and disposal of subsidiaries. That is, whatever is the aggregate cash flow which arises from acquisition and disposal of subsidiaries or other business units, that should be presented separately. So if there is any cash flow from the acquisition and from the disposal of subsidiaries, we've already done this point right now. So they have to be presented separately. And you have to disclose in respect of the acquisition and disposal mainly the total purchase price, the portion of the purchase or disposal consideration you have discharged by means of cash and cash equivalent. Okay. And you don't net them off. We've already done a question. Now we talk about non-cash transactions. These are those investing and financing transactions which do not require the use of cash or cash equivalents, and they are usually excluded from the cash flow statement. They have to be disclosed elsewhere in the financial statements in a way so that proper information is available. And some of the examples are acquisition of assets by assuming directly related liabilities, acquisition of enterprise by means of issue of shares. So if you're simply acquiring by means of issue of shares, there's no cash going in. Okay. Issuing shares and acquiring an enterprise. Then conversion of debts to equity. So you're not paying cash. No? What this point is that I'm acquiring your enterprise and I'm just giving you my shares. So again, there's a non-cash transaction. It's important investing, but not involving any cash. Similarly, if I'm acquiring some assets by assuming some liabilities, I'm not paying for that. Conversion of debt to equity. Again, I'm just converting my debt into equity. So I'm giving you shares in pursuance of the debt which I was supposed to pay you. So there's no cash outflow with respect to that debt. There's only an outflow of shares. Components of cash and cash equivalents, we know that we have to disclose them, and we have also to present a reconciliation of the amounts in cash flow statement with the equivalent items which we have reported. So you have to disclose the components of cash and cash equivalents, and you should present a reconciliation of the amounts in its cash flow statement with the equivalent items reported in the balance sheet. Okay. That means if in the balance sheet something is appearing at amount A, and here if something is appearing at amount B, so we need to reconcile them. And you have to disclose a policy which you have adopted in determining the composition of cash and cash equivalents. And any change in the policy for determining components of cash and cash equivalents is the effect of that has to be reported in accordance with AS5, net profit or loss for the period, prior period items, and changes in accounting policy. This is important aspect. Now, other disclosures is the last point which you're going to cover. You also have to disclose along with the commentary by management the amount of significant cash and cash equivalent balances which you are holding that are not available for use by. So whenever there is a commentary by the management, you have to disclose that this is the significant cash or significant cash equivalent balance which we are actually holding, but as of now it's not available. So examples are maybe there's one example given here, which includes cash and cash equivalent balances are held by branch that operates in the country where exchange controls or legal restrictions apply, as a result of which you cannot use the balances. Then there might be certain additional information which you might need to give to the user so that they can understand the financial position and liquidity. And this information along with the commentary where the management is encouraged. It may include the amount of undrawn borrowing facilities that may be available for future operating activities. So whatever is the undrawn borrowing facility, do not utilize that. Okay. That may be available for future operating activities and to settle capital commitments. You might add this that, okay, I'm eligible to, let's say, deposit. So I'm eligible for this much, but I'm not taken this much. So that means there is some thing which can be used for operating activities is going to be used to the user. And of course, if there is any restriction on the use of these facilities also, that also has to be disclosed. Similarly, the aggregate amount of cash flows that represent increases in the operating capacity, they have to be clearly mentioned. And the cash flows which represent increase in operating capacity should be separately shown from those cash flows that are required to maintain operating capacity. Something which represents increase in operating capacity has to be kept separate from the cash flows which are required to maintain, because that is true for a number perspective. Separate disclosure of cash flows that represent increase in the operating capacity and cash flows that are required to maintain operating capacity. Why it is separate? Because it helps the user to find out whether you are investing adequately in the maintenance of operating capacity or not. And any enterprise which does not do that, we know that it is reducing future profitability for the sake of current liquidity and distribution loans, right? So now with this, your theory portion is clearly over. You can just go through this all these points quickly for just to kind of a revision, and then we'll proceed further. Watch both the videos once again, and then I'm going to send you certain questions. Please try and attempt those questions so that the whole concept is very clear. Thank you so much.